I'm Sean Reynolds, the owner of Summit Properties Northwest and Reynolds and Klein Appraisal. And today I have with me Shannon Kershaw of Legacy Capital Group. And Shannon, we have worked together for many, many years.
Yes.
So we go back as far as Bay Mortgage and then also Legacy Group Lending and now Legacy Group Capital.
Yep.
And so tell me a little bit about Legacy Group Capital. Give me a little bit of history there.
So Legacy Group Capital was formed in 2008. We're a privately funded small niche lender that just specializes in short-term bridge lending.
And by short-term bridge lending, give us a few examples.
Anything short-term is less than 12 months. Construction, specifically bridge loans, fix and flips, spec lending. So anything that kind of lives in that 12-month period.
Right. So we do, on the Reynolds and Klein end, we do a lot of appraisals for you, a lot of rehab loans, a lot of construction loans, and more recently, some loans for people getting equity out of their homes. That's the main thing that we're going to talk about today. So you've got kind of a new program that helps out both the homeowner and real estate brokers who have clients in this scenario. Tell us about that kind of niche that you guys are expanding into.
Sure. So Legacy Group Capital kind of went back and figured, put our heads together collectively on how we could expand our market and kind of find something to assist homeowners in the marketplace right now. So we went back and we thought of a bridge loan, and a lot of people think that bridge loans are kind of an urban legend because if you do fit into the small box, you either don't qualify on one way or another. So Legacy went back and said, okay, why don't we allow homeowners to use the equity in their home without listing their home and selling it first so they can make non-contingent offers and compete in this crazy market.
Okay, so you guys kind of bridge that gap, and when they don't have enough money for the down payment or they're not competitive enough, you guys provide a short-term loan so they can buy the next house and then have time to sell their home and kind of make everything work.
Yeah, we're seeing that a lot of people have a ton of equity in their homes, but they're too afraid to list their home because it will sell too quickly, which I'm sure you guys are running into too. So it kind of bridges that gap so they can find their new home, make a non-contingent offer, compete in the marketplace with these cash offers or quick closings because most of their cash is tied up in their existing home.
Right, right. And you guys have kind of different underwriting criteria as far as how you analyze the borrower's package. Tell me a little bit about that.
So for everything us kind of lives in, make sense lending, and I realize again that is an urban legend, but for us, we kind of look at the end result. So if someone's exit strategy for us is to sell their existing home and just have one home at the end, we kind of view it that way. So we kind of go back to just the borrower's whole picture. A lot of times you have to qualify with all the debts. Some bridge lenders, we will qualify you with just the debt in the end because we know your intent is to sell your home. So it's very different than most in the marketplace.
Okay. And so in making your lending decisions, you rely upon a lot of your own instinct, the appraisal, kind of getting some valuations. Tell us a little bit about that.
So for us, we kind of look at the departing collateral, how much equity is there.
The home they're going to sell.
The home they're going to sell.
Yep.
What their debt is on that. And we get an appraisal on the property to determine that fully. And then also the new home. At the end of the day, how much of those proceeds from the existing home are they going to be dedicating to the new one? So what does that long-term qualification look like for them? And what we're seeing is that most people are putting, at the end of the day, they're going to be, 75, 60% loan to value when they go into their long-term financing because they have so much equity.
Because they had so much equity in their existing home. Right, okay. And so I know you can't quote rates because that's just kind of a big no-no in the industry, but how does your short-term loan compare in the marketplace to other lenders?
So what I will tell you is that the biggest conversation I have with people is when we do give them our rates and our fees associated with a transaction, and they're written between 3, 6, and 9 months. We're seeing most things happen in less than 3 months. But what we get most of the time from agents or borrowers like, wow, that was way less than what I was expecting. So
okay.
it's very competitive for what the client is trying to accomplish in the end, and they're happy to pay, the rate or the fee associated with the transaction because they're getting the home they want. and the seller is getting what they want to.
Right. So this is a make sense kind of deal. It's private funding. They don't have to go through the whole typical bank rigmarole of loan committee and all that. You guys basically assess it on your own and yay or nay. And how often do you decline a customer or a property?
We do have guidelines that we follow, but again, if there's some extenuating circumstances or there's additional factors associated with the transaction, just because someone doesn't necessarily fall within the guideline that we have, it doesn't necessarily mean that they would be a declined loan. They're just going to have other compensating factors. You know, maybe more of their compensating factor is a free and clear property that there's no mortgage against, and maybe they're slightly below our FICO requirements. So there's give and take for all the factors.
Right. Okay. That makes sense. Again, I'm Sean Reynolds from Summit Properties Northwest and Reynolds & Kline Appraisal. And Shannon Kershaw from Legacy Group Capital. I appreciate you coming in and explaining your niche program. And this is an awesome program if you are a homeowner looking to buy, or if you are a real estate broker that has a client who kind of fits this parameter. They have tons of equity, but they don't have the money in the bank to make a purchase. This is a really good program. So thank you, Shannon, for sharing this. And we appreciate you watching the video. Love to have you like, subscribe, or make comments for our next videos. We create videos all the time. Sometimes they're on real estate like this one was today. Oftentimes they're on other topics as well. But again, thanks for taking the time to watch the video. Bye. Thank you for taking the time to watch this video. If you like what you saw, please hit the subscribe button down below. And to check out our other content, we'll have links right here for other videos we've recently shot. Again, thanks for watching.